I don't think we can point our finger just in that direction. As you perfectly pointed out in the introduction, we have a perfect storm now of different reasons why investors and institutions are purchasing gold. Firstly, if you look at the data, we still see that central banks are investing and hoarding gold at unprecedented levels. For Q1, they managed to actually beat what was Q4 last year, which was already a record high. So there's something that is encouraging the central banks to purchase gold. And we've seen a lot of activity from the likes of China. We're seeing activity now starting from some of the other neighboring nations, such as Korea and so forth. But I do think that we can also look at other factors too. And you're right to point out that geopolitical tensions could be one reason why investors would look for a safe haven. But at the same point, that would also suggest that oil prices should have shooted higher as well, and that hasn't been the case. But I do think there's still so much hanging on to hopes that investors will get a aggressive change in interest rate policy this year, lower, which has historically been good news for gold. But generally speaking, many of the institutions are still seeing 3,000, which I think is optimistic as a potential target. So certainly 2024 overall is going to be remembered as the year of gold.
Interesting. Jameel, how good an investment is gold? Some analysts say it's great, especially now. It's soaring, there's geopolitical tensions, it's a great safe haven. Some others say, yes, it's good, but it should only represent a small percentage of the whole portfolio. What do you think?
I think if you're looking for a traditional safe haven, then gold will always be a trader's best friend. But having said that, I think it's really important now to a retail audience to point this out, which is the everyday investor, which is more likely watching this show, is that what comes up can come down. And overall, the number one rule of investing is never invest anything more than you're potentially prepared to no longer have. I.e., if that investment goes against you, which can happen in day-to-day investments, these are liquid markets. Overall, though, if you are potentially looking to build a portfolio, if you're looking for a safe haven, then yes, gold can be added. But I'd also look at other alternatives too, like the US dollar, which still on a historical level is at big highs. And we're also seeing world markets, which might not be a safe haven, but they're touching unprecedented levels too. Last week was the hat trick. We had US markets, S&P 500, the Dow Jones, and the Nasdaq all hit record highs. So I think you have to look at the bigger picture now, that 2024 will also be remembered as the year where traders put everything in their shopping basket, to use that metaphor.